There are 3,313 auctions scheduled to take place this week. That's up 10% on the same week last year. New South Wales will hold about 1,200 auctions, with about 950 of them in Sydney. Victoria will hold 1,440 auctions, with most of them in Melbourne. Queensland will hold about 360 auctions, with about half of them in Brisbane. South Australia will hold about 200 auctions, with virtually all of them in Adelaide. Western Australia, Tasmania and the Northern Territory will hold 25 auctions between them, and the ACT will hold 100 auctions. Taking a look at the most viewed properties going to auction this weekend, the top property in New South Wales is 36 Torres Street, Kurnell. This three-bedder has 2 bathrooms. Top property in Victoria is 9A Hawkins Avenue, Mont Albert North. This luxury residence has 4 bedrooms, a pool and space for 4 vehicles. Price guide is up to $2.2 million. The top property in Queensland is 311 number 50 Macquarie Street, Tenerife. This apartment is in the old wool storage building on the banks of the Brisbane River. The agents are taking offers over $1.57 million. The top property in South Australia is 48 Sullivan Terrace, O'Sullivan Beach. This 3-bedder does need some TLC, but it sits on 700 square metres and is just minutes from the beach. And the top property in Canberra is 92 Macrossan Crescent, Latham. This large 6-bedroom home sits on about 1,000 square metres and has a swimming pool. And the most viewed property on the REA Group website this week is 17 5th Avenue, St Peters in South Australia. This 4-bedder home is in one of the most prestigious streets in this Adelaide suburb, just minutes away from the CBD. The home has been recently renovated. No expense has been spared by the owners. The property still has its original facade with period features, but inside it's been totally redone. The house has a modern kitchen, a backyard pool, open plan living areas, outdoor patio and parking for 2 vehicles. The auction is scheduled to take place on December the 15th. And for more on property, I caught up with Eleanor Creagh from REA Group a little earlier.
Yeah, you're exactly right. So buyers really benefiting from that increase in choice that we're seeing. It's been a much busier spring selling season this year than it was last year. And we're seeing that continue to flow through to scheduled auction numbers. So we've got auction volumes up around 10% on the same week last year, this coming weekend. And next week, actually, they're up around 20% on that same week last year. So a continuation of an increase in new listings coming to market. That's particularly the case in Sydney and Melbourne, really giving buyers a little bit more choice.
Yes, there a bit of a rush with some sellers to try and get their properties sold before everything sort of slows down at Christmas?
Yeah, you're exactly right. So we do see that activity drops off quite sharply over that Christmas period, and January is also usually pretty quiet as well. So I guess the race to sell before year end is most definitely on at the moment, and that's probably one of the reasons why we're seeing auction volumes picking up or a little bit busier, but certainly remaining busier than they were this time last year. And that's really in keeping with what we're seeing in terms of that improvement in conditions on the ground, with national home prices having risen now for 11 straight months. So every month of this year.
So sellers clearly feeling pretty confident. What about clearance rates? How are they going?
Yeah, so it's interesting. I think that continued uplift in home prices has really played into that increase in both buyer and seller confidence. And we are seeing that is incentivising people to continue to list their properties on market. That's particularly the case in Sydney and Melbourne, where we've seen that big uplift in the volume of stock coming to market. Now, even though we have seen that auction volumes have picked up, certainly relative to last year, we've seen that clearance rates have held pretty firm. So again, consistent with that, I guess, improvement in market conditions and that stronger home buying demand environment that we've really experienced for most of this year.
So a couple of weeks left, then a break in January. When does it start to kind of kick off again?
So we usually see that we've got that seasonal slowdown through the holiday period, and January is also pretty quiet, and then we see activity kind of coming back in February, and we are expecting that some of that strength that we've seen in terms of new listings volumes, again, particularly in the major capital cities, Sydney and Melbourne, is probably going to continue into next year. And that's going to be one of the reasons as to why we're expecting that the pace of home price growth is going to continue to slow into next year. So we've seen that this year, Pretty
It's been
much.
pretty strong.
Yeah. Most capital city markets have recorded pretty strong price growth and actually above average annual growth. Most capital city markets are on track to clock this year, certainly with Sydney prices probably going to end the year up around 9%.
Wow.
Brisbane, Perth, Adelaide also all remaining pretty strong, but we are expecting that pace of home price growth is going to slow into next year.
Yeah, so a little bit slower next year, but are there any regions that could do pretty well in 2024?
So certainly next year, it's going to be a slower pace of home price growth than we've seen this year, and we've still got that stronger home buying demand environment in play, buoyed by that continued rebound in net migration, tight rental markets, those equity gains of recent years, also encouraging upgrader activity, and all of that facing into this slowdown in the completion of new homes, which is hampering new supply. So those factors are going to continue to see home prices lifting, and I think those relatively affordable markets that have really benefited from that affordability advantage this year too, so Perth, Adelaide and the likes, are going to continue to record a stronger pace of home price growth.
And what about regional areas?
Regional areas are certainly interesting. So we've seen that regional areas really held up better last year when interest rates were first rising. But this year it's been a bit of a different story. So we've seen that it's capital city markets that have really taken the lead in that 2023 home price recovery. Now we could see, I think, that some of those more commutable and affordable regional areas do continue to perform quite well into next year. But I think other regional areas that are maybe less accessible and the likes are probably going to continue that underperformance relative to capital city markets, because we've got that, I guess, extremely elevated demand that we saw throughout the COVID period really tapering off. And at the same time, in a lot of those areas, we've got a normalisation of stock on market. And those factors together are seeing home prices less insulated, so to speak.
Now, last question. This week, the RBA kept the cash rate on hold. Do you think they're done with interest rates?
Yeah, I mean, interest rates are going to be a big one for next year. Now, certainly we're seeing that inflation pressures are continuing to head down in the right direction, with the RBA, as a result, remaining on pause this week. Now, there was question marks about whether the Reserve Bank would have to continue lifting interest rates next year and whether a February rate hike would be on the cards. Now, I think that after that GDP data that we saw out this week that really shows that households, I guess, are tightening their belts and spending slowing quite sharply, and households are really feeling the pinch of those interest rate rises that have already been delivered and still yet to really take their full effect. It's looking likely that we've probably seen the peak in the cash rate for this tightening cycle, and we don't need any further policy tightening.
Great. Thanks so much for your time, Eleanor.
Thank you for having me.